Looking at Bitcoin, and hey guys, TA 101, we're going to draw a high to the low and look at the 161.8% Fibonacci extension. We're using this in logarithmic scale. Make sure you guys are changing your setting down here to fib based on log scale as well. And that gets us to a price target of 95,000.
This episode is brought to you by Uphold, which is one of the top crypto platforms in the industry. I've been a user of Uphold since 2018. They make it easy to buy, sell, and trade crypto. They have 300 plus cryptocurrencies on their platform, which includes Bitcoin and all the top altcoins. And folks, they do not commingle. They do not lend out your funds. They are 100% reserved, and you can review their transparency report. And they have a lot of great features that make it easy to execute your trades. They also have a great new product called USD interest accounts, which allows you to park your dry powder or your crypto profits and earn up to 4.9% APY. Now, the 4.9% APY is only on balances over $1,000. Below 1,000, it's 2%. But what's great about this product, guys, is there's no lockups, there's no monthly fees, there's no subscriptions, and best of all, it is FDIC insured just like a bank. So if you'd like to learn more about Uphold, visit the link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Caleb Franzen, who's the founder of Cubic Analytics. Caleb, good to see you. Welcome back.
Tony, thanks for having me, man. The last time we recorded this, I was in Santa Barbara, California. That was, I think, a few months ago. Now I'm back here in Eastern Europe. So looking forward to this, brother. Let's do it.
Absolutely, Caleb. I appreciate your analysis. I follow your newsletter. I follow you on Twitter. So I'll have links to that. Everyone, go check it out. And I want to get your take on what Bitcoin is doing, what we can expect in the short term and the long term. First, what do you think about this breakout that's happening?
Well, the funny thing is we haven't even really broken out yet, right? So obviously from a short-term perspective, I have to be really encouraged by this price action. If people have been following my work, we've been prepared for this, right? I think the last 6 or 7 months, this has really been viewed as an opportunity from my perspective. And so for me, I feel really comfortable to just kind of sit back here, relax, check in on my Coinbase account, log into my cold storage, see where things are at, and just keep getting richer day by day. So, for me, it's just been great. I don't have to do anything in this environment because, we've been doing all the preparation. We've been doing all of the allocation. We've had the conviction. We knew we were going to continue to get this uptrend behavior. And now let's just get the follow through, right? So the crazy thing is we haven't even actually had the breakout yet. The amazing thing from my perspective is the lack of a breakout here is aligning with what we're seeing, with what I'm seeing in the stock market at the very least, which is that the NASDAQ 100 is on the verge of breaking to new all-time highs as well, taking out those mid-July of 2024 highs. And so we're really getting a lot of confluence here in terms of if we can get this breakout in both the NASDAQ 100 and Bitcoin, I really expect to see significant follow through. I might be wrong. The beautiful thing is, as a breakout trader or as an investor who at least interprets breakouts as being a bullish thing, if that breakout fails and we roll over below those recent highs, we find out if we're wrong really quick, right? Yeah. So the risk reward here at these levels, once we get that breakout, I guess I should say, if we get that breakout, I think we will, the risk reward is going to be really attractive. So I think there's a lot to be excited about right now. I don't want to be overly enthusiastic. I still want to have risk controls in place, so on and so forth. But sure, for a lot of investors who have been following my work, we've been prepared for this. So it's been really great to see.
Yeah, absolutely. And look, Bitcoin's been in this boring sideways accumulation zone all for 6 months and all throughout the summer. So it's great to see some price action. But to your point, we haven't gotten full confirmation. It hasn't broken through the all-time highs set earlier this year of 73,500 or something like that. And obviously, we're talking probabilities here, right? There's no certainty. But you believe the higher probability of playing out is the bull scenario?
Yeah, 100%. I mean, my cycle target, I've been talking about it since we were trading at 31,000 in the middle of last year. It's 175K. I still think we're getting the 175. People keep asking me, is that going to happen in 6 months or 12 months? To that question, I say, who cares, right? Whether we get to 175,000 in 6 months or 12 months, are we really going to be complaining? So, my cycle target prediction is still the same, at least 175,000. If I'm wrong, I'm wrong. Let's say we only get to 150,000, I know for a fact people are going to be coming after me in the comments. People are going to be, pulling this screenshot, right? Clipping this, the whole 9 yards and saying, Caleb, you said we were going to 175. It's like, cut me a break if we only get to 150, you know? So look, from my perspective, yeah, 100%. I think whether you're talking about the stock market, whether you're talking about Bitcoin in particular, the bias has to be to the upside. I think that one of the most amazing things that we're seeing this cycle is that it continues to be dominated by Bitcoin, right? So we really are seeing that divergence of Bitcoin versus everything else. There have only been a few select things that have actually been able to outperform Bitcoin. Solana's been one of them. Sui was more recently. And then we've seen Dogecoin and a few other select memes, right, do really well against Bitcoin. But, you know, the quote unquote utility tokens, we're here for the tech, you know, excuse my language, but they've really shit the bed, you know? And so we're seeing Bitcoin dominance at 60% yesterday. Right. You know, you pull up that chart, it's making higher highs and higher lows, right? And so from that perspective, I think at the very least right now, you know, Tony, we talked about it the last time I was on here, you know, expressing my bullishness on Solana relative to Ethereum. I had come out publicly saying I had exited ETH in favor of Solana. That chart just hit new all-time highs recently as well, right? So for me, I feel really comfortable having basically my entire exposure right now in Bitcoin and Solana. We'll see a month from now. We'll see 3 months from now. That's probably going to change. Maybe it's not. Who knows? So it's really important to stay flexible and adaptive as always. But this cycle has been dominated by Bitcoin. And from my perspective, in a lot of ways, I've been positioned for that. So I've been very happy with that, right? For a lot of people, it's the fact that Bitcoin has been leading this cycle means it's been very boring for them. But Bitcoin's up 110% year over year. We're up 70% year to date. And so in that backdrop, I don't know how you can be underwhelmed by this bull market. If you're underwhelmed by this bull market, you've just been positioned incorrectly. And that's your problem, not mine.
Great point. And I've been a big believer in diversification. I keep telling people, you know, don't get caught up in narratives. Bitcoin leads the market. I mean, just look back at the previous bull market cycles. Yes, certain altcoins can outperform Bitcoin, but they're further out in the risk curve. Bitcoin is the safe haven in this asset class, the less riskiest asset, in my opinion. So I hold that and I have some altcoins. But if you don't have exposure to Bitcoin, I don't know what you're doing.
Yeah, exactly. And it's providing the better risk-adjusted returns in this market for 24 months. So, you know, it's not like this has only been a 6-month thing where Bitcoin's up. No, it's been 2 full years where Bitcoin dominance has been making higher highs and higher lows. Guys, that's a bull market characteristic when things are trending up and to the right. So, you know, when we're seeing that kind of stair-step behavior, that's an uptrend. And I don't know about you guys. I don't like to fight uptrends. I like to align with them. Yeah. So, you know, but again, hey, that's just me, right?
Right. So talk to us about your outlook on the different macro factors. So you mentioned the NASDAQ, right? The stock market has usually been a leading indicator of what's to come in crypto. You got Fed rate cuts, you got global liquidity on the rise, you got the ETF buying, the election uncertainty is going to be out of the way next week. Are you looking at these different factors as part of your thesis for the continuation of the bull market?
Yeah, look, we're in the middle of earnings season right now for the S&P 500. I think when I pulled the data this last weekend, about 35% of S&P 500 constituents had reported earnings so far. And we were seeing strong beat rates in terms of revenue and earnings. So companies are not only raising guidance as they did last year, but they're now beating the guidance that they provided us last year and in the prior quarters. And so from a fundamental perspective, we're seeing forward 12-month earnings continue to hit new all-time highs. And if asset prices are just a function of future cash flows and interest rates, if future cash flows are expected to keep rising, then shouldn't asset prices also be rising? And that's exactly what's taking place, right? So this isn't rocket science, guys. It's pretty straightforward, right? And so long as we continue to see macro fundamentals where we have a resilient macroeconomic backdrop, resilient consumer behavior, resilient labor market dynamics, the Fed is cutting interest rates. We don't need to see a massive liquidity boom here. We just need to see liquidity on the margin improve, right? And we've now made that inflection point. Good things are taking place. And so in that environment, look, I've been really bullish, really since April of 2023, coming out aggressively bullish, right? And I was predicting recession in 2022. So it's important to be flexible and dynamic, right? But I've been really steadfast here, looking at the same macro indicators, looking at the same big picture themes to justify having a bullish perspective on the market, coupled with TA, coupled with the statistical indicators that I've created and the ones that I look at. And so from that backdrop dynamic, nothing has changed, right? And so we could be having this conversation 3 months from now, those fundamentals could change, right? And that's why it's so important to be adaptable and dynamic.
Yeah.
But until those things change, I'm not going to change my conclusions. And so I'm going to come on here, I'm going to still sound super bullish, but guess what? That bullishness keeps paying off. So, if it's not broken, don't fix it.
Yeah, and you've been doing that in the face of a lot of doomers because I remember 2023, recession, end of the world, this, that,
Yeah.
this war, that war, the bank collapses, and all these different things. Yet the markets kept moving. So people get caught up in too many narratives versus looking at data for sure.
Yep. And sometimes I think it's really important to just say, you know what? I'm not smarter than the market. So what is the market telling me? And what are asset prices actually doing? Because you and I can have different opinions on different things and how much they're going to impact markets or not. But one thing's a fact, price. And if prices are trending higher, that's generally a sign that investors are expecting a better future. And so sometimes you just have to be humble enough to take a step back and say, the market probably knows better than I do. And I just need to align with what the market's doing.
Okay, Caleb, can you share your screen and show us what you're seeing on the short term for Bitcoin, and as well as, has your timeline changed for the blow off top, which may take place next year?
So guys, I want to start with this chart first and foremost because this signal is literally flashing as of yesterday. And so this is fresh alpha. You're not going to get this anywhere else. What we're looking at here is the super trend indicator for Bitcoin using a 10 length ATR. This is the default setting, and the 7 factor for this other input here. And so why am I using 7? There's 7 days in a week. So this is basically a weekly measurement, if you will. And so what we're seeing for the first time now in several months is a green bullish signal taking place. And so I thought to myself, hey, what happened to Bitcoin the last few times this happened? Within the next 90 days after the signal flashed, we've been up at least 60% within 3 months. So 60% within 3 months. If we look at the second signal here, which flashed in late October of last year, we gained 145% in 142 trading days.
Wow.
So again, I don't even care if we get these same results. Positive results are positive results. Bullish signals are bullish signals. So I'm not coming on here saying we are going to gain 60% in the next 90 days. I don't know. This could be a failed signal. It's a statistical probability, right? That's all we're trying to assess. And so signals can fail. No indicator's perfect. But as we try to gather the weight of the evidence and make a determination about what's probable over the next 3, 6, 12 months, et cetera, this is a really important indicator here that's flashing right here, right now, telling us to expect higher prices in the coming months. So look, I think this is fantastic. No one's talking about this. I shared this on X a few days ago before the signal flash, saying to be in anticipation of this, and now we got it. Boom, here in the flesh.
So let's say things do go according to plan, right? As we're looking at this scenario, let's go conservative and says it goes, I don't know, 40%.
Sure.
Where would that put us?
Let's talk about it. So 40% gain from here would put us at 100,000 on the dot. So 40% gain from here, let's say it takes 3 months and we're sitting at 100K. I have another chart here with me, is looking at Bitcoin and hey guys, TA 101. We're going to draw a high to the low and look at the 161.8% Fibonacci extension. We're using this in logarithmic scale. Make sure you guys are changing your setting down here to fib based on log scale as well. And that gets us to a price target of 95,000. Let me do one more thing here. Let's get this in regular scale so we won't do it in log. And this gives us the linear 161.8% target, gets us to 89,000 and change. So now with both of these together, we basically have a range of 89,000 and 95,000 as a price target if and when we achieve this breakout. Again, we haven't had that breakout happen to new all-time highs. But then again, when we couple it with the fact, I love what you said, let's just pick a somewhat arbitrary number, underperforming even the last two signals. What does 40% get us? 100,000, right? So now we have this range here, basically looking at anywhere between 89 to 100,000 as a reasonable target, especially if we make new all-time highs, right? From a statistical perspective, this signal is flashing. It's telling us good things are happening, but we also need to see conclusive evidence of breaking to new all-time highs and staying at new all-time highs, right? We need to confirm that move.
Yeah, so like you're talking about, confirmation of those things would be like the weekly close, the monthly close, and so forth, right?
Yeah, for sure. And I mean, hey, let's talk about what the monthly's doing, right? I mean, man, this monthly candle looks insane. We don't need this indicator anymore, obviously. But look, these monthly candles are just picture perfect, right? So if we get rid of, you know, some of these data points here, one of the charts that I've really been showing, especially on X, is you know, looking at these former all-time high monthly closes from the 2021 cycle. Guys, we never closed below those monthly closes, right? So even during this pullback, you know, one of my favorite bull market setups as a trader and as an investor, I call it a breakout, retest, and a rebound. Here's the breakout, here's the retest, here's the rebound. And so far, this has been a picture perfect breakout, retest, rebound type of setup, which happen during bull markets. You flip former resistance into support and you get a continuation to new all-time highs. The only thing we're missing now is that official continuation to new all-time highs, and what, we're like 1 or 2% away.
Yeah, absolutely. So are you thinking, once again, probabilities now,
Yep.
that this, seasonality wise, Q4 has done well for the markets,
yeah.
that maybe if everything goes according to plan, Bitcoin's hitting a new all-time high this quarter, rolling into Q1, maybe there's a bit of a pullback, building support, then the bull market continues. Maybe we see a blow off top in Q2 like we did in 2021.
Sure, yeah, it's possible. I think if you look at the 4-year election seasonality, the strongest year during that 4-year election seasonality is the first year of a new president. And that's coming in 2 months is when we start that seasonality, right? So seasonality dynamics are looking pretty damn good. I also want to share with you here more of kind of some short-term dynamics that are going to be taking place and are taking place right now. Shout out to Callie Cox from Ritholtz Wealth Management. Looking here at S&P 500 performance going into the election, 30 days before the election and 30 days after the election.
Wow.
And so as of right now, we are 6 days away from the election in the United States. I don't know if you see this here, but the S&P 500 tends to bottom 8 days before the election, rip into the election, have a little bit of a buy the rumor, sell the news event, cool off here for literally 2 weeks, and then continue higher in the final 2 weeks of that 1 month period after the election. So when I look at this right now, this is telling me really good things are likely to keep taking place. Tony, I don't have the chart on hand, but the last time I was on the show, we had talked about election year seasonality and how markets typically bottom end of September going into early October and rip thereafter through the end of the year. And so, you know, as we kind of have that context at our fingertips here, that's telling us once again, in addition to the statistical indicators, in addition to the resilient macro data, in addition to Fed cutting interest rates, in addition to all of these things, even the seasonality is aligning with us. So again, we're sailing and the wind is in our sails. I don't want to fight this. I want to stay on the ocean. I want to keep sailing, right? It's a beautiful day, right? I'm not trying to go back to land. I'm trying to stay out on the water, right? So we're in a bull market. The music's playing. You got to dance. All these things are aligning. I'm not saying to abandon risk controls. I'm not saying to take 10x leverage long positions, close your laptop and go on vacation for the next 3 months. Right. I'm not saying to be irresponsible, but what I am saying is I do think it's irresponsible not to have a long bias, not to have a bullish bias. So at the same time, we need to temper those expectations. We need to be smart. We need to be tactical. We need to be adaptable and flexible, but we need to be bullish.
Talk to us a bit about your profit-taking strategies. I think that's important for people, especially as you know, we go back into a euphoric sentiment, right? Where there's extreme greed and it's never going to stop. It's going to keep going, Caleb. And now we're not stopping here. We're going to 1 million this cycle, right? We know I've experienced that. And the first go around, I fell for it, right? And then I realized I had to learn and understand reading the charts and where to take strategy. So like when you marked out the 1.618 with the fib, is that a profit-taking marker for you? And then above that as well?
Yeah, it absolutely is. So I get asked all the time, like if an asset is hitting price discovery, basically meaning it's never trading at these levels, essentially making new all-time highs, it's really hard to determine potential resistance levels because you have no resistance levels. We're literally making new all-time highs, right? So in that environment, that's where I think using those Fibonacci tools is really important. So you can look at the 123.6 as well. The 161.8% is my personal favorite. Again, that's how I came up with my cycle prediction target as well for the peak. I think fundamentally though, like, let's also take a step back here and just think as a trader, as an investor, if you're looking to take profits, you have two choices. You can sell into weakness or you can sell into strength. And so for each investor, they're going to have a preference about which type of market environment they want to be a seller. Some people might actually prefer selling into weakness because they're going to have confidence that they rode the market to its peak and now they're waiting for that trend to shift. Some people are going to prefer to take profits into strength. I'm not going to tell you which one is better for you. For me, I've struggled to even find which one I prefer. It's a really hard thing to know. I think if I had to pick though, and one of the things that I'm going to try to do better in this cycle than I did last cycle is taking profits into strength, right? You don't go broke taking profits. That's, basic math, right? You can't go broke by taking profits. And so are you going to make more money taking profits earlier? No, but you're going to keep more at the end of the day, most likely, right? And so again, for each investor, based on their goals, based on what their existing wealth is already looking like and their net worth, they're going to have a different preference. So again, I can't tell people, but what I will tell you is take a long, hard look at yourself in the mirror and come to that determination. Be really honest with yourself about which type of market environment you're better suited to handle as a seller. And I think that's really important. So that'd be my word of advice.
That's great advice, man. And, one of the things I've learned over the years, to your point, is looking yourself in the mirror. Where am I financially? Do I need the money ASAP? There's different factors. We're all in different financial situations, but I made sure that, and back in 2020, I wrote down a plan. Like, I'm going to start dollar cost averaging out or ladder out at these price points, based on the technicals, right? At Fibonacci, Elliott wave, and so forth. Now, did everything hit the price points that I wanted? No, but I made sure I walked away from the market with money versus not having any.
Yeah, exactly. And I love what you said about creating a plan and sticking to it as best as you could, right? And even if some components of that plan didn't come to fruition, other parts did, and you still acted on them, right? So I think that's important. I also want to say this, which is like, if you're taking a position on something and saying, if this 2X's, or if this gains 50%, or if this gains 5X, I'm going to sell it. If you get there, sell it, right? Stick to the plan, stick to your commitment. Don't, I saw a lot of people yesterday operating with FOMO, right? Because the timeline was euphoric. I was contributing to that because it felt really good yesterday when we were hitting 73,000. But, as investors, you never want to make emotional decisions.
Yeah.
They're quite literally subpar, right? If you're making emotional decisions as an investor. So you want to approach markets as much as you can with logic, with a plan, and then execute on that. At the end of the day, we're all going to be emotional to some capacity. We're not robots, right? We are emotional. So already we're likely to deviate from some of the plans that we set forth. So, sticking to the plan as much as possible is really what you have to do. And each person, like I said, is going to have their own plan, their own preferences. So the best thing we can do is be honest with ourselves about what's most suitable for us at this time.
Let's take a look at the altcoin market and the total market cap and how that's performing right now. As we talked about before, Bitcoin is the leading. It moves and then it has a gravitational pull and pulls everything with it.
Yeah, exactly.
All right.
we're looking at Sol ETH here, okay? And so what I really want to highlight, I guess I have it written twice for some reason. What I really want to highlight here is this beautiful breakout that we're just getting in real time, right? And so this is what I was positioned for. When we got this big breakout here in August where Sol ETH hit new all-time highs, that was a signal, right? The market was speaking there. The alpha is coming from Solana relative to Ethereum. When we got this breakout, retest, rebound, this is the same setup that we were talking about for Bitcoin earlier, right? Here's the breakout, here's the retest, here's the rebound. Now we're making new all-time highs. And so as I look at this chart today, what this is telling me, let's really zoom in on this now. Look, if we're going to have another breakout, retest, rebound setup, this blue range right here, if you've missed Sol relative to ETH, this is where I'd be looking to make that transition. Once again, this blue range is where you want to be buying Solana and selling Ethereum. Again, you'd have really tight risk controls here, really attractive levels. But this, look, in a lot of ways, Solana is kind of the golden child of this bull market. It was a big leader in the last bull market as well, right? And so, as we think about Ethereum kind of losing its luster, making new multi-year lows relative to Bitcoin yesterday, quite literally. Solana, like last cycle, everyone was looking at ETH BTC as a representation of altcoin flows, right? As a signal of moving further out onto the risk curve. If ETH BTC was rising, risk is rising. If ETH BTC is falling, risk is falling. This cycle, it's SOL ETH, right? Or SOL BTC. And that's been the key one for me. And so as we're seeing this breakout take place, I think we're getting very close now to seeing even more justification to be long altcoins in some capacity, not too far here. Sure. One thing that is standing out to me that's really important, and this is a signal that I'm waiting for in real time. Tony, you know how big of a fan I am of this 200-day moving average cloud. Yeah. And so what we're looking at here is the 200-day EMA in blue and the 200-day simple moving average in red. And so this is beautiful, dynamic resistance and support. And if we're above the 200-day moving average cloud, we're in a bull market. If we're below it, the trend is weakening.
Yeah.
Very simple stuff here. Myself as an investor and as a trader who's looking to rotate more cash into altcoins, what am I waiting for here? I'm waiting for a breakout above the 200-day moving average cloud. Why? Look at the last time that happened. That was here in July of 2023. And guess what happened thereafter, right? By the way, we're looking at others. This is total crypto market cap excluding the top 10, right? When we got that breakout in July of 2023, others continued to use the 200-day moving average cloud as support once, twice, 3 times, 4 times, 5 different times. And then when we finally continue to stay above it, I mean, we were staying above it for basically 4 months here. But when we finally got that massive move up, we gained 230%, 228%, let's be specific, in 155 trading days. So we're talking about a 3.3x basically in 150 days. So look, every bull market ever is categorized for, and this is for any asset, guys. Every single bull market is going to be categorized by price trading above its 200-day moving average. So how can we validate if we're in or not in a bull market? Is price trading above its 200-day moving average cloud? I'm literally reverse engineering a bull market definition, right? That's all I'm doing here. And so what do we notice here again? This 200-day moving average cloud acted as resistance at the July highs, acted as resistance in the September highs, and has been resistance in all of the October highs. What are we pushing up against right now? The 200-day moving average cloud. If we can break and close above this, you can see this brief wick above it right here. We need to break and have a daily close above this level. It's basically 232 billion market cap for others. If we get that, it's risk on. And guess what? If I'm wrong, let's say I'm wrong, and I get super bullish once we get the breakout, this happens, and then we immediately roll back below it. You place a stop loss below the bottom of the cloud. So your stop loss is literally right here. So here's the trade, you guys. Let's do a real life actual trade setup right here. I always forget where this damn tool is, so excuse me. Here it is, long position. So we would go long with the daily close above the 200-day moving average cloud. We would likely target these highs back here, so we can adjust this level now back up into this range. That's 30% implied upside, and our stop loss is 4.9. We're talking about 6.3x risk reward. I don't know about you guys, but 6.3x risk reward is pretty damn good. Yeah. So if I'm wrong and I take a 4.9% stop loss, guys, I'll take that every day of the week.
Right.
4.9% is not going to break my bank. It's not going to screw me over. My long-term trading ability is not going to be hindered. And guess what? I have the opportunity to gain 30.84% on the upside. And I'd probably sell some exposure there. And I'd probably look to sell more exposure at the all-time highs. That's 57.6% away, which raises our risk reward almost to 12x, 11.75x. So I don't think anyone has ever gone broke taking it an 11.75x risk reward trade opportunity, right?
For
So
sure.
yes, losses can happen, failed breakouts can happen. We need to be prepared for those. But as we assess risk and as we attempt to control and mitigate risk, this is a setup that I take every single time.
Mm. Now, for this to get going, right, what you showed in the chart
Yeah,
and have a breakout, I'm assuming it needs a lot of liquidity has to flow through from Bitcoin down to the alts, right? Like we've seen historically.
maybe. I mean, why does it need to come from Bitcoin? It can come from cash,
True, true. Um,
right?
I guess it depends on the phase, like how right now alts are, with the exception of like Solana and stuff, majority
Sure.
of alts are like bleeding against Bitcoin. They're not performing that well. Many haven't even broken out
Right.
from the bear market bottom. That you need that Bitcoin to kind of pull in the rest of the market and retail, right? And it becomes a media frenzy again, and then you start seeing people jumping into altcoins and things like that.
Sure, yeah. And look, I want to be really clear. I think if we do get that bull market continuation, let's say all my predictions come true and we get to 175,000 for the price of Bitcoin. I think in that environment, most likely Bitcoin dominance is going to fall. But that doesn't mean that capital is coming out of Bitcoin going into alts. What that means is that alts are just going up more than Bitcoin,
Mm.
right? So that's kind of my perspective on that. It just means that people are converting USDT into
Mm.
alts, right?
Right.
It doesn't just have to be coming from Bitcoin. It can be coming from other alts as well. It can be coming from memes, right? Who knows? So
Right.
for me personally, and like no disrespect, Tony, but there's too many options for where that capital can be coming from. So
Sure.
for me, it's not necessarily coming out of Bitcoin into alts. It's just coming out of anything into alts.
Mm. Yeah, great point. Because I think we tend to just look at the rotation of capital from Bitcoin, but to your point,
Yes,
there's tons of stablecoin liquidity and supply out there that's going to come into alts directly as well. I guess an example of that would be like Solana and meme coins, where they've been leading the alts for the most part since beginning of 2023.
for sure. Yeah, and they definitely have. And so I'm also trying to pull up a chart here, and I'll share my screen once I have this actually set up. But as we think about even stable coins, right? I think one thing that's really important is, we're seeing stable coin market cap at all-time highs, right? And so in that environment, there is basically the equivalent of US dollars in the crypto ecosystem ready to be deployed into more crypto, right? What we're looking at here is USDT market cap in blue and USDT dominance in green.
Mm.
And so ideally, guys, what we want to be seeing out of this data point is something very simple. What we want to be seeing for a bull market environment, and I'll prove why after I highlight this, is we want to see USDT dominance falling and we want to see USDT market cap rising.
Mm.
Fundamentally, guys, what does that mean? That means newly minted Tether is being created and it's being immediately redeployed into the crypto ecosystem in terms of altcoins and Bitcoin.
Mm.
Because if more USDT is being created, but the percentage of USDT relative to total crypto market cap is falling, which means the green line is falling, that means that newly minted USDT is being immediately redeployed into crypto, which means it's moving far out onto the risk curve, which means we're likely in a bull market. So let's just go ahead and prove that really quick. I can now add on to here. Let's just do total 3. Okay.
Mm.
Actually, no, let's just do total. And we'll put this on a new pane. Look at when total ripped last year,
Yeah.
September of 2023, which was right when USDT market cap started rising and USDT dominance started falling. Right? Now let's take the inverse of this. When did USDT dominance start rising again? Basically meaning that people were shifting their coins back into stable coins. That was
Mm.
when the market peaked in March. And we've
March.
been seeing USDT dominance make higher highs and higher lows since then, right? And this has really been why there's been so much pain in the altcoin market, is because USDT dominance is still rising. People aren't moving further out onto the risk curve. The good news right now, guys, is now we're seeing exactly what took place in September of last year. We're
Mm.
seeing USDT dominance peak and roll over, make lower highs and lower lows, and we're also seeing total crypto market cap move to the upside. During that time, we're also seeing USDT market cap rise. So as far as I'm concerned, right now, we have all of the conditions necessary to support a continued uptrend in total crypto market cap. This is all great data, you guys.
Yeah,
I'm giving too much alpha here today. this should be fucking illegal, okay? This is too much. This is like, guys, we have all these signals going on. We have the conditions in stablecoin market cap behaving exactly as they should. We have resilient macro data. Guys, Q3 real GDP just came out today, up 2.7% year over year, up 2.8% annualized. This is great data, right? 233,000 jobs, private market jobs created in the month of October from ADP private payrolls.
You know what?
What are we talking about? You know what I mean? It's just like, this is a great environment to be a bull.
Yeah, absolutely. And one of the things I was going to follow up what you're saying, I think sometimes people get, going back to that narrative thing, they get caught up in political narratives or the media narrative, but they're not looking at data, exactly what you're showing to form their thesis. It's, oh, I feel this way and because I want this candidate to win, so I'm going to make it look like this is happening. They get caught up in all of these things versus data, looking at the data.
Yeah, look, I'm no fan of Joe Biden, but the economy, generally speaking, under his presidency, and I don't give presidents credit for the economy, hardly at all, right? I think a lot of that comes from Congress, a lot of it comes from the Fed, a lot of it comes from the private market. People just like you and me, we make up 70% of GDP data, right? So 70% of GDP growth is coming from our pockets, not the government. But the economy is resilient, right? And generally speaking, when you zoom out, stocks do well regardless of which political party is in office. So, as soon as you start mixing politics with market predictions, you're doing it wrong, okay? So I even hate talking about politics, coming on different podcasts and talking about the market, but I'm only bringing it up to say it doesn't fucking matter.
Right. Exactly. And that's the point I want to hammer home. I'm not telling people who to vote for, and I've been telling them, stop paying it. People are saying, oh, Trump's going to win. That's going to make Bitcoin go to 125. No, that's just the narrative. The point is they both control the money printer and it's business as usual. So I tried my best to do it, but people get caught up in these things.
Yeah, and it's the hot button topic right now. I mean, I'm here in Bucharest, Romania, and my friends that I've been back now for 5 weeks. They're always talking to me about the election. Everyone wants to hear my thoughts on what's going on in the U.S., right? So, this is the topic, right? I mean, this is just what's happening in the world. So we have to mention it. But again, as we think about it in the context of what to do in terms of investing, I think we can look at it from a seasonality perspective. Like we talked about, election year seasonality, the 30 days before and after the election, so on and so forth. But again, unless we're taking active trades today and tomorrow, right? And maybe some people who are watching this it probably doesn't matter who's gonna become president.
Yeah.
From a market standpoint.
Right. Yeah. Yeah. We're specifically talking about market. Asset prices.
We have to be so careful talking about this, right? It's just like, oh my gosh.
For sure. Now, Caleb, earlier you mentioned like your big bets are Bitcoin and Solana, and you highlighted the Sol ETH chart, and ETH is underperforming. But you're not saying ETH is not going to move. You're just saying it's not going to perform as great as Solana, right? That's the takeaway I want to make sure some folks are clear on.
That's exactly right. And maybe 3 months from now, we're seeing that Sol ETH chart. It's no longer going to be making higher highs and higher lows, and now it's making lower highs and lower lows, which means that ETH is outperforming Solana, and we can maybe shift our stance again. I came out publicly a few weeks ago and said either Ethereum is the greatest value play in the history of crypto, or this is a downtrend and it's a falling knife, and I don't try to catch falling knives. So, I'm staying away from Ethereum right now. 3 months from now, we could be having a totally different conversation. I'm not bearish on ETH.
Right.
I'm bearish on ETH relative to Solana. Essentially saying I'm more bullish on Solana than I am bullish on Ethereum, right? So there's nuance to this. I tell people on Twitter, I probably do this tweet several times a week, embrace nuance, right? Yeah. So when we're looking at relative charts, they're relative. They're not absolute. Ethereum can go up and Solana can outperform it, which means that Sol ETH is going to rise, okay? So I'm just focused on that conclusion, which is so far the evidence has shown us that Sol ETH is rising, which means that Solana is outperforming Ethereum. And if you want to align with trends and not fight them, then you want to align with that uptrend, which means you want to own Solana and not own ETH. I'm not telling you to short ETH and long Solana, which is a pair trade, which you could do. I'm just saying own Sol. That's all.
Yeah, absolutely. And that's part of why I did the same as you. I increased my Solana
Nice.
holdings. I had bought some at like 18 to 20 bucks back in 2023, but then I continued to add because I noticed exactly what you're saying, what the charts were showing.
Yeah, exactly. And yeah, I think, I made a lot of money at the beginning of this year when altcoins were breaking out and I was taking very aggressive, active short-term trading positions and I was taking profits that whole time. I obviously gave some of it back in March, April, and May. And after I licked some of those wounds, I just continued to rotate all of that capital into Bitcoin, basically between 50 and 65K. And so, great. Now I'm sitting tight on that. If we see this breakout in Bitcoin to new all-time highs, we get that target extension to 161.8. We get those statistical indicators flashing off, so on and so forth. And by the way, there's others that I haven't even mentioned, right? So people can comb through my Twitter. They can subscribe to Cubic Analytics on Substack and find all of those studies that I've referenced and produced myself. And if that environment comes and we see Bitcoin dominance start to decelerate or actually decline, if we see Ethereum outperform other things, right, we can adapt our stance. I'm on this podcast, we're talking, we're sharing market ideas, we're having a great time. I'm not committed to anything, right? I could sell everything tomorrow. I'm not, but I could. I reserve the right to change my mind, right? And I think as investors, you can force your perspectives onto the market, and that's a great way to lose money fast. Or you can just align with what the market is doing and accept that the market is going to change. The market changes. So you can change with it. There's still some people who I used to respect who are still extremely bearish because they were predicting a recession in 2022.
Yeah.
It didn't come. The Fed was tightening. They kept raising rates in 2023. They kept saying, don't fight the Fed, this, that, and the other. And they're still bearish today. And it's like, man, the S&P 500 is up 40% year over year. 40% year over year. Bitcoin's up 110% year over year. You haven't needed to go super far out onto the risk curve or really do too much. All you needed to do was change your stance. I had a lot of bulls block me in 2022 because I was short-term bearish, okay? In 2023 and 2024, I've had a lot of bears block me, right? Yeah. So I'm upsetting both sides here, right? So, this is my not to self-promote, because that's not what I'm trying to do, but for the people who are actually engaging on X or listening to different podcasts or whatever the case is, make sure you're following people who are adaptable, who are changing, who are objective, who are being thorough, who are looking at the weight of the evidence. They're not going to stay narrowed in on a specific narrative. They're going to be willing to change their mind. Go back and listen to what people said 6 months ago, 12 months ago. Are they repeating the same false narratives that have led to bad results? Or are they continuing to say a lot of the same things, or at least having the same approach, right? Are they approaching markets from the same perspective and then still being adaptable in their conclusions? That's totally fine. One of the things I've said before, I'm going on such a rant here, Tony, so I apologize, but this is just so important. Yeah. This is so important. It's okay to be wrong. Yeah. It's not okay to stay wrong. So you have a choice. You can take a swing and you can miss, or you can blindfold yourself and just keep swinging. Right? Don't be the latter, right? You can be wrong, change your mind. Don't be afraid to change your mind. Be humble enough, have the humility to say I was wrong, or at least recognize that you are wrong, learn from those mistakes, improve, change your mind, get better, right? It's so key, right? And this isn't just a market lesson, this is a life lesson, right? This is so important.
Great advice, man. And I've gone through my own journey to being adaptable and more fluid in the markets. And, before we kind of get this, I don't know how to put it. It's like a religious thing with coins, and people get very attached to it. And it's like, no, what is the market telling you? And you're going to have to adapt your strategy. And thankfully, I've learned that lesson, and it has allowed me to make money and not be holding something just because I'm emotionally attached to it or I like it, but what is the market telling me? So it is great advice, man.
Yeah, thanks, bro. And you can be right, or you can try to make money.
Yeah.
Right. Exactly. And like again, there's just a lot of armchair macroeconomic quarterbacks on X and on different podcasts who are just trying to be right. And I'm like, man, these guys, I know for a fact these guys aren't making money. And what are we doing here? I don't know about you guys, but I got involved in investing because I want to make money and not because I
Right.
want to be right. You know, if I want to be right, I'll become a weatherman, right?
Yeah.
I'll look at the weather report for tomorrow. I'll say, okay, great, it's going to be sunny, right? Hey, I wake up the next day, I'm right. Does it change my life? No, I'm here to change my life. I'm here to make money and bring people along the way with me.
For
So,
sure.
that's what we're here for. And guys, I don't know about you, but bull markets are the time to make money, right? So I typically you don't make money during bear markets, right? Shout out to the people who can short and do that kind of stuff, right? Especially in the face of such a strong bull market. It's not what I try to do. So bull markets are quite literally the time where you make money as an investor.
Right.
So again, music's playing, you got to dance, you got to have a long bias, you got to be bullish here, you got to control risk, right? It's so key, right? But these are the key ingredients for success if you want to be an investor.
Absolutely. Caleb, man, always great insights and knowledge. I appreciate you, man, and thank you for joining me. And everyone, check out Caleb's newsletter on Substack. Link will be in the description. Follow him on Twitter or X, or what Elon calls it now. Links will be in the description as well.
Appreciate you, bro. Great to chat as always. Hope people enjoyed it, and we'll do this again very soon.